Good morning. I'm Catherine Ross with TheStreet here at the NYSE with Jim Cramer. How are you?
Well, there's a lot of gloom. Okay, now I've been saying that we had to be a little more cautious. I was hoping this wouldn't happen. I was hoping that the Federal Reserve would walk back those inane comments that we got
you've been saying that all week.
Yeah, well, because I think a lot of the problems are related to, say, something like a Trinzio or a PPG, this basic building blocks of the economy, saying that things have gotten quite weak. And so, I don't like what's happening. Now, that said, Catherine, I can tell you the velocity of the decline in the NASDAQ is extraordinary. And we are making some positive moves for action alerts for club members because this speed of the decline in the NASDAQ is usually not sustainable. So it may be a good level to pick, all right? Now, everyone is starting to adopt my cautious outlook. When everyone adopts the cautious outlook, you tend to have to go a little bit away and say, okay, well, what has been being thrown away in the first 10 sessions in October? So I don't want to present myself, now that everyone's quite as gloomy as I was, it makes me a little less gloomy. Misery doesn't really love company. Misery wants to run from company. Now here's what I'm looking at. I need to see Amazon bounce. I need to see Alphabet bounce. If those bounce, I'm going to be right that we could be very close to just this incredible oversold bounce that we typically get after this vicious decline. But that said, remember, what we're dealing with are rising raw costs, both from tariff and from oil and gas, but also labor, and declining margins because they've not been able to pass on these things for the basic building blocks, whether it be polystyrene, whether it be linerboard, whether it be paint. These are all basic building blocks, and against that is the economy is able to create jobs. So you'll see retail do well, you'll see a Yum do well, you'll see a Kohl's do well, an ActionAlertsPlus.com name. But against that will be an industrial economy where we're literally going to be struggling to find who has pricing power. Without pricing power, the forecasts are going to go down. Now, a lot of people have been saying, Jim, you were too negative, you were too negative. Well, this is what I feared. And ever since the Fed told us not to worry, the economy's so strong that we can do rate hikes all through 2019, that was the beginning of what said to me, don't be as bullish as you were. And that's exactly what we did. We raised a lot of cash for action alerts. And I'm looking at what I was worried about.
So rewind a little bit because I'm curious why you choose Amazon and Apple.
Well, Amazon and Alphabet. And the reason why I picked those is because of this. When the economy is slowing, people go to FANG. The economy is clearly slowing, okay? And now job growth is still strong. That last employment number was okay. But what we're seeing is when you have a compression in margins, and you could say Amazon's compression margins, they did the $15 an hour, but a very good article today about how they really aren't they're cutting out the bonuses. But I just think that I like to look at the ones that are trampolines, that are down the most, that people have a lot of faith in, and they switch out of the industrials to those. But there's no rush, okay? I'm just saying that that's where the bounce is. I did not, when I said all since last Wednesday, cautious, 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 I was trying to help people traders avoid this. Longer term people, like our trust, have to buy some things because you're not going to get big price breaks that often. But short, the traders are going to have to say, all right, where do I pick? Longer term people, you probably should buy some S&P. If you have a major commitment into your 401k, let's say you wanted to commit or TRA wanted to commit $2,500. I would commit $500 of it right into this weakness. I would pull it through from when I would do it at the end. I'm doing that for myself, where I put my SEP, I put some money work with my SEP here today, because I just feel like, you know what, I have to take a very long-term view, and I like to wait for price breaks. But you have to understand that, Catherine, this can change. Talking to my friend, writing partner Matt Horween, if the Fed stops it with the don't worry, we're going to keep raising. If China gives any positive theme, now I don't think China's going to relent. China's really in a Cold War now with us. But if the Fed says, you know what, this China situation is threatening, we're worried about the ripple effect of linerboard of plastic basic building blocks. I know Jay Powell knows this stuff. And says, hey, listen, maybe we can't be lockstep. Then you're going to see that maybe people are going to say, you know what, the market has come down that we can handle revisions. Otherwise, you have to watch stocks like J&J and Pfizer and Lilly, ConAgra, because those are the stocks that people buy when we go into recession.
I want to get your take on this. So, Snap. I mean, they announced this morning that they're going to bring in new entertainment, TV show lineup, that kind of thing.
That's what I thought they were going to do. That was their plan, and that's good. They shot themselves in the foot with their Android. Doesn't seem to have recovered. But the main thing that happened to Snap, and a lot of people, I think, two things happened to Snap. One is that the advertisers don't like it as much. That's why they need this programming. But the other thing that happened is that Zuckerberg is a very competitive fellow at Facebook. And there are a lot of things wrong at Facebook, but one thing isn't wrong is Instagram, which was a shame that Systrom left, because I really liked Systrom. But Instagram Stories is doing quite well. I'm on Instagram Stories. We do, we're opening a new place, the Longshoreman, and it's a block in from the East River in Brooklyn. It's Columbia, 215 Columbia. I had some pictures on Twitter. And we're using Instagram as our method of telling stories about the new place. And you might have used Snap in another generation, but Snap appeals to people with no purchasing power.
Yeah.
And Snap's got some weird ownership structure that I compare to the Juncker. You can Google Juncker, it's Juncker, Juncker-style government. And I don't like Juncker-style governments. Once again, I just wanted to point out, because it's a live show, that you need to watch for a bounce today. The vicious decline in the Cloud Kings and the FANG stocks is not sustainable. Right? You can't keep going 100 miles down every single day. You do tend to get a bounce. The industrials are more disconcerting. And I wanted to buy some J&J, with the trust wanted to buy some J&J. It never comes in. That's not a good sign. But just be aware that when you get the velocity of this decline, and if you could get oil down a little bit, which would be very positive, so you get oil down a little bit and you get the Fed saying the right thing, then you're going to wish that you didn't sell, which is why I say long-term people ought to use this decline, put some S&P money in it.
You
had for
had
my kids too. I have this. You have these windows. I can only buy the index funds. I got to commit some capital.
That makes sense. You had a really great segment on your Mad Money show last night. I really loved it. The CEO segment.
Oh.
And
okay.
I wanted to ask about what you think investors should be thinking about when they're hearing like Elon Musk speak, or anyone really.
The people I speak, men and women I speak to, they were just aghast about what the Fed said, because they're sitting there trying to figure out their forecast. I speak to a lot of banks, and banks report on Friday. And they don't want to hear that mortgage rates have to. Remember, the mortgage rates went to 5%. The housing market, I got to tell you, Kathy, the housing market is. I actually, my wife's in real estate, and I actually reviewed our portfolio and said, listen, we got to make some sales. You got to make some sales before things go down. My wife said, there are no buyers. There's no buyers. Not a good time to sell. I said, but Barry Stern, the tonight for Starwood Properties. I mean, he's just saying New York is really bad, Denver's really bad, California's really peaked. Arizona's peaked. There's still some value in North Carolina and Tennessee. They're still going up. Florida, we have to see what happens if this hurricane. That's where I actually looked at a place, by the way, in St. Joe that got wiped out in the last hurricane. And what I would emphasize, this was on Mexico Beach, what I would emphasize is that the CEOs are concerned because they feel gloomier. The Kavanaugh fight didn't help, by the way. And they talk about things like that. There's, the Kavanaugh fight. Both sides of the equation, by the way. So what we need to see, and the reason why you can't be too negative on a down like today, is that if the Fed makes calls, let's say they speak to the CEO of 3M, and they say, listen, we're having some auto problems. We sold ITW. Now, ITW we've owned forever. Auto, PPG, Trinzio, auto. Auto is very weak. I think that in Mexico, in the plant that is next to my place in Mexico, which is Querétaro, you'll see just gigantic PPG factory. And they're talking about the backup, and that's all the luxury cars use that really high-end PPG paint. So, I just want people to be careful because there are inventory backups throughout the system.
Now, I could talk to you about this all day, and
Sure,
I'm glad that we
whatever.
also get to talk on the Action Alerts Plus video, which is next.
We drill down about individual stocks.
Exactly.
But we also are going to be talking about individual stocks in the October 13th teach-in.
Exactly.
I've been preparing my speech, going over it last night, and obviously we're in a fluid situation, so I will continue to refine it and refine it and refine it.
All right, guys, that's a wrap for today.
Yeah, remember, we cannot go down at this pace forever. By the way, Home Depot very interesting. If the Cat 4 storm is as bad as I think it's going to be, and anyone who's watching, I know the area. Looked at some houses many times in that area because I live there, and skedaddle. Okay, skedaddle out of there because it happened so quick there that you blink and that storm is 140 mile an hour winds is there.
You heard it from Jim Cramer first, guys.
Please.
You should leave.
Go see Governor Scott.
So thank you guys for joining us today. I'm Catherine Ross with TheStreet here with Jim Cramer. We'll catch you guys tomorrow. Have a great day.